Okay, hold on to your wallets because gold just did something wild. It hit $4,400 an ounce for the first time ever. That's right, $4,400. If you thought Bitcoin was the only shiny thing in town, think again. But here's the twist. While gold's breaking records, Bitcoin and crypto aren't just standing around watching. Nope. They're quietly reacting to the same macro forces that just sent gold skyrocketing. So if you've ever wondered where real wealth protection is heading, this is your moment to pay attention. All right, guys, welcome back to Ledger Prime. This is the channel where we talk crypto, macro trends, and how to actually preserve your capital without falling for hype or shiny objects. Today, we are connecting the dots between gold's record rally and crypto. Because if history tells us anything, the forces moving gold are rarely far from the forces moving Bitcoin. And yeah, spoiler alert, fiat money is not looking so shiny right now. The dollar, you know what we think about that. Cash is trash. So let's talk gold and the record high. Here we go. The obvious headline: gold is now officially worth more than a small country's GDP per ounce. Okay, well, maybe not literally, but it feels like it. Why? Macro uncertainty, inflation fears, and central banks printing money like they're playing Monopoly on expert mode. Investors are flocking to gold as a safe haven because, well, when the world feels like it's kind of balancing on a tightrope, right? We don't know what the heck is going to happen. Debt, global uncertainty, geopolitical tensions. A shiny metal that you can hold in your hand just feels comforting. And 4400 bucks, that's historic. No champagne for the Fed though. Just panic buying from anyone who remembers 2008. So let's talk macro forecasts and let's zoom out 30,000 foot view because we need to take the headlines and dissect it into actionable intel that can actually make us money. So why is gold jumping? Inflation, of course. Inflation. The Fed does what the Fed does and keeps playing with interest rates, printing money, and global debt is making economists sweat into their coffee. People are looking for assets that actually hold value, things that can survive a world where cash is slowly being devalued, right? Cash is trash. We're devaluing the dollar. Every time we print money, devaluing the dollar. Money, our money, needs to go into deflationary assets. Gold, Bitcoin, crypto. Those are deflationary. But guys, here's the kicker. When gold moves like this, institutional investors don't just shrug. They start looking at alternatives. And that's where Bitcoin quietly starts clearing its throat. Because if gold is money, Bitcoin is like money 2.0. Decentralized, finite, and screaming, hey, I don't get printed, right? You can't make more of me. So here's the fun part. Bitcoin is basically the digital cousin of gold. Same role, different delivery method. Both act as hedges against inflation. Both are scarce. And both make your friends who bought a Lambo in 2017 slightly jealous today. When gold surges, savvy investors start asking if 4400 bucks is just the starting line for shiny metals. What does that mean for Bitcoin, which has a hard cap at 21 million? Man, it just makes you think. You can still get more gold out of the ground. You can't get more Bitcoin no matter what you do. So long story short, macro forces that drive gold higher often slightly nudge crypto and take it along for the ride. They're kind of weird second cousins that show up at the same family reunion, don't really know each other, but everyone notices. So what does this mean for investors, for me and you, right? Let's cut through the hype. Let's cut through the $4,400 an ounce headlines and figure out how we can make money. How can we position ourselves? So guys, this is not financial advice, right? This is just education and entertainment. But what's the takeaway? What is the takeaway for you, for me, the everyday investor? First, don't panic buy like it's Black Friday. This isn't a get rich quick moment. Instead, think diversification. Gold protects, Bitcoin innovates, and holding a mix of both can make your portfolio more resilient. And timing matters, luck matters, and let's be honest, patience matters. Because nothing in macro or crypto moves in a straight line. And if you're looking for a place to park your wealth, when fiat, the dollar, feels like a deflating balloon, consider this pairing seriously. And yes, you can still complain about high gas fees while doing it. I won't judge you. So to wrap this up, gold's record-breaking $4,400 price target is not just a headline. It's a macro signal. And guys, on this channel, we want signal, not noise. We want to see the price of gold and figure out what we can actually do as investors to take action on this new macro headline. Okay, I know we just had some fun. We had some commentary talking about gold, making a few jokes. But let's talk real intel. What does it tell us? It tells us that investors are worried. The money printers are working overtime, and hard assets are back in style. And crypto, especially Bitcoin, is quietly flexing in the background, proving it's not just a trend, but it's part of the same story. So guys, remember, time to stay informed, right? Read through the headlines. Don't just think $4,400 gold is awesome. Oh, okay, great. We need to stay informed and read through it and figure out what it actually means and how we can position ourselves to make money in the environment that we're in. We also need to stay skeptical and focus on protecting capital. Do not blow up your account. And guys, this is the whole game. Okay? It's staying informed, it's reading through the lines, it's positioning yourself to make money, but also not losing it all. So whether you're stacking gold, Bitcoin, or just keeping an eye on what the Fed does next, right? Make smart choices and stay informed. Because this is Ledger Prime, guys. We're connecting the macro, the crypto, and markets in ways that actually matter. And sometimes, yeah, we give you a laugh along the way. But ultimately, we want to stay educated and stay focused and lock in. Because the world is about to be tokenized.